Hello, my friends. So, definitely glad that I was on both sides of the market. Here we are now at the 200-day moving average. I do foresee us going deeper, but this is a good opportunity to reposition. I have myself, I took some profits on the short side. I sold some puts, and I'm buying back some short. I sold against calls to create vertical spreads in a previous trade, and now I'm buying back some of those calls that I had sold used to create the vertical. So like I'm closing the short position. There's a long leg and a short leg. Short leg is when you sell the contract and you keep the difference unless you time the market, in which case you buy it back. So that's what I'm doing. I'm still pretty much short because, like I said in a previous video, whew, it looks like we have the. I should have read that differently. So there was an opportunity today, early in the day, to open those puts, but this was also talking about yesterday. In any case, right here during the day, we're going into the second low, right? And this is an opportunity to buy long positions. So I'm repositioning myself, guys. I'm not getting rid of all of my puts. So I'm going to sell against some of my puts, like some 470, 468s that expire in February, mid-February, February 16th. I've got 450, 452s. I sold the 450s. I own the 452s. Those are for the 26th. So, those are going to cash in. I'm actually not going to close all of my short call positions, but I am going to. I'm basically holding. I'm taking some profits, expecting a little bit more of a drop on Monday morning, possibly. I don't know, or a little bit more of a drop here. But I am repositioning myself right now. Any short-term puts, I want to sell those. And then my calls are all out super far, like February. Well, not super far, but February 4th, I've got 457 calls. I'm buying 455 calls. I actually am going to buy some more down here in the 439 area because obviously we've gone much further down. But these have totally been like the loss on these was canceled out because I sold calls against them. Like the 450 long 455s, I sold 458s against. And those 458s, they expire sooner than the 455s. So what'll happen is those will depreciate faster, and then I can either buy them back or I can decide what to do, buy calls underneath them. There's a lot of stuff that you can do with the diagonal spread. I would not mess with those type of things unless you're. I'm going to sell against these 458s. Unless you're like seasoned, I wouldn't mess with diagonal spreads. Like the only spreads that I should have been messing with when I was new was vertical spreads. And even so, it wasn't like putting on legs one at a time. It was just like buying both legs or opening both legs at the same time. Keep it simple, guys. It's Mercury retrograde for one thing. All right. So yeah, so I'm gonna hold my 438s just open. There's no short leg against them. I'm buying back 458 calls and holding some actually I'm buying back the 462 calls. I'll hold the 458 calls that I sold against the 455s. And this is a great opportunity to buy some calls. I forgot I have a 439 that expires today. Totally forgot about that. I bought that yesterday as a speculative play. So I have 439 puts that expire today. I bought them at 85 cents. And what do I see for the rest of this day? We have like a pop back, I believe. 320. Yeah, so we have that low right around here, right about there, and then we have a push higher. So I'm going to go ahead and I'm going to sell that. Expires today. That was nice. I basically doubled the money. I have a few, just like that, those 438s were totally speculative and they panned out. I've got some 414s that expire on Monday. I bought them for like 16 cents. You know, just a little bit, just a little extra. You don't want to like pile up on something that's speculative because you'll lose your shirt, especially if it's next day expiration. My God. I actually am a little bit heavier on the put side in one of these accounts. I have twice as many 434 puts that expire on the 6th as I do 450 calls that expire on February 4th. I'm just checking out a strategy in my head before I talk to you guys about it. Just came to me, so I'm going to check it out real quick. I think what I'm going to do with those 434s is I'm going to sell I'm gonna sell. Sorry guys, I'll be right back. Alrighty. Um, so January 26th or January 24th, 435s. Before I do that, I just want to check this out again. Yeah, I'm gonna buy a few of them, not all of them, and then I'm gonna sell. I mean, I'm gonna sell against a few of my 434s and buy a few calls down here at this level. You know what? I'm not gonna buy anything. I'm just gonna hold tight, guys. I'm just gonna hold tight. Well, actually, let's buy some speculative calls. Let's do that. Have some fun. Nah, not gonna do it. I'm just gonna sit tight, guys. Sorry. So you know, I'm basically a little bit heavier on the short side, or I was on the put side. Now I'm about equal, equal puts, equal calls. I've bought back some of my calls. There's going to be a lot of volatility on Monday. A lot of volatility on Monday. You see, we've got the ace. We've got a local high, or month's high and month's low correlator there. So we'll open up higher and then we'll drop. We're gonna have that pushback starting now, guys. All right, so I did sell against them. I sold against those 430, those January 26th 435 call, 434 calls that I had. I've sold against them 430. 5 calls, and basically I have dollar spreads now that I didn't pay for. I actually got paid for them. I bought I bought the 434s for 244, and I sold against them the 435s for 464. So basically, that spread is now the house's money. I took my money back. I also did another. I did a short. I have covered short covered puts, vertical credit spread, but I'm not really gonna even explain that to you guys because you just shouldn't mess around with that stuff. It's definitely not beginner. But I collected a bunch of money right up front, and provided that the market turns around and goes higher, that's a good idea because I'll still own. I'm not gonna. I'm not gonna tell you the numbers because really you shouldn't do this, guys. But I sold against my. You know what? Fuck it. I sold against my 434 puts. I sold against them 435 puts. They're also house's money now, and I've capped off my maximum loss at $1. Now, if I'm right and market turns around, I'm going to make a lot of money because I have puts that I sold against them. If I choose to, I can buy them back, but there's a lot of volatility next week. So that's what I'm going to look to do in the midst of the volatility, buy them back. And at the most, I'm losing $1. It's a really small credit spread. What I'm looking to do is buy them back, make a profit there, and then hold on to my short legs again because I feel like we're going to have that bottom on Monday. So we're going to open higher, bottom, but have a bottom on Monday, like towards the end of the day. Might do that one more time. See, there's that pop back we're getting. That 444 is really standing out to me. All right, I'm buying 450s. Fuck's sake. Sorry, guys. I'm going to come back on when I'll just do it here, guys. Sorry. I'd rather not waste my time because this market's going to move. All right, so what I just did is I sold, and I didn't want to tell you guys because it's really risky. What I did is I sold 450 calls that expire on the 31st. I sold them at 333, right? And then I waited a little bit to put the long leg on. The long leg depreciated down to, I bought 448 calls against the 450 calls, and I bought those for 489. So basically, I got a $2 spread for about 50 cents. Um, so basically, if the market goes up on one day, I could sell those for a profit, or I can hold them, reposition them, whatever. If they expire in the money, it's $2 per contract. I paid 50 cents per contract, and that's the capped loss, is the 50 cents. Had I done the two legs together, it would have cost me probably $1.50, maybe a dollar. Yeah, see, guys, you got to understand there's a high correlation to the following day's card. So Monday, there's a high correlation here today, the sun card for Monday. Look at all this bullish stuff at the end of the day. So even if we don't have a big bullish thing at the very end of the day, we'll see it Monday. We've got that fortune card. That's uh, generally that's like a new high of some sort. In some cases, if you're reaching new highs, like new all-time highs, that would be an all-time high for sure. But since we're at such a low level, it's a new high, a significant one. Basically, I did that with some 434, 435 puts as well, two separate legs. That one was crazy. I bought those bought the 434s for 244. I sold the 435s for 464. So like I got paid to put on that position max loss because I did it in two legs. The max loss is less than the credit that I brought in. When you have a lot of volatility and you know when to time, it's really fucking cool. Yeah, I want to buy another call. All right, I'm gonna sell this 438 January 26th expires. Yeah, I'm gonna sell that. 438 puts that expire on the 26th. Matter of fact, we've got further to fall. Just realized there's a correlation here to the trade card, which is also the um, the trade card is the hanged man. So it looks to me like we're going to go further. push higher, some fluctuation, big push higher. Also, Debak push higher. That was a trade opportunity in there as well, right? We have a low. This was 320-ish. Boom, right around there. Move higher. And now it's the very end of the day. We're going to have another decline, it looks like. So I didn't sell those January 26 438s yet. I'm going to sell them right before the close. Well, my internet's acting really slow, guys. So I've basically repositioned myself. Looks like I may have just lost my internet. I basically repositioned myself um, so that I still have some puts. I'm looking for a drop tomorrow, or Monday, I should say, towards the end of the day. I don't want to miss out on like a big drop over the weekend. However, I don't foresee that. So the majority of what I repositioned is now on the long side. As far as calls, or I sold short against some of my puts. And that's basically to reposition myself for Monday, where we see decline, decline. Interesting. Well, that's basically where I'm at, guys. Check out the prediction